Mm. What's going on, everybody? This is Travis Witherspoon from Carter Capital, helping you fight for your financial freedom throughout the forex market. This is another morning 6:30 episode of Trade with Travis. Hopefully, everybody's doing very well on this morning. Uh, Went 0 for 3 during the night session when it came down to trading, partially because I didn't put trail stops on most of these trades. So I got kicked out on DAX earlier this morning, and oil, I didn't like how it was turning around, so I ended up catching a loss on that one. So we'll see if we can be able to re-enter those trades. All of those was a small percentage. That's the way that you want to be able to keep it, so you're not necessarily blowing all of your account. But that puts us into a position to where we're kind of looking at what's happening today. Obviously, today's a big day. We got FOMC meeting minutes. That's going to end up happening at 2 o'clock. So we have to be able to pay attention to how that's going to end up playing out. So today's going to be a quick session, but we will talk about every pair real quick. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. You understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, as we go through and take a look at these charts, the first thing that we always pay attention to is the economic calendar. Today is FOMC day. We're going to end up having interest rate decisions, and that means that Jerome Powell talks. And remember, when Jerome Powell talks, the market moves. Whatever he ends up saying, it's going to end up rocking the market in some type of way. So we just got to be aware of that when it comes down to the trading opportunities that will be presented in front of us, and then after that, take advantage once we end up understanding what the direction is going to end up being. We don't know what the direction is going to end up being overall. The last two times that he has talked, that has pushed the market to the downside. Let's keep that in mind. And has pushed the market to the downside, honestly, very drastically. But there's we can't assume that the market's going to fall down again going into uh, today's session. So that is the thing that we will pay attention to. Let's go through the big three real quick, see what's happening. For the people that are watching live, it's always good to be able to talk to you. If you are watching live, make sure that you end up hitting up that chat box and saying, hey, it's always cool to be able to talk to everybody that ends up popping in from there. So I'm going to talk about the oil trade that ended up happening a little bit earlier today. Uh, ended up happening last night. Ended up getting triggered in, and market quickly turned around. Went back inside of consolidation. My strict rule is if the market jumps back inside of consolidation after breaking into a vortex zone, you automatically just exit the trade. You look at being able to wait for the market to be able to break out to the upside or to the downside once again from there. So you exit, you re-enter, and then after that, you kind of play and readjust your overall movements. Now, with that being said, I'm going to zoom out. I'm going to talk about what the game plan was, and then after that, see how we adjust the game plan so we can be able to make our money back when it comes down to this movement. Market has been going through this overall downward channel. Currently, right now, we end up seeing this consolidation that has been happening over the course of the last few days. That gives us a chance to be able to know that, one, the market may be ready to start making a pop up to the upside. Yesterday, we ended up having economic news based off of the Canadian dollar, and their consumer price index was actually bad. So I don't know how that truly affected the market. Well, it affected the market to the downside, but it didn't push the market beyond that consolidation and kept it moving beyond that consolidation. So um, we just got to keep that in mind when it comes down to that overall movement. But going back to the hour, essentially what happened was that got placed inside of a trade at 84.05. Market fell all the way down to 82. Once the market fell down to 82, I'm sorry, got placed on the trade at 45. Market fell all the way down to a low of 83.46. End up falling asleep. Typically, that's what you end up doing at night. Then after that, market roared from 82.05, and then after that, pushed all the way up to 86.02. Now, my stop loss was at 87, but my simple rule, and it's always been the same, is that if the market pushes back inside of consolidation, you got to exit the trade. It is what it is. You just keep on moving, and you sit up there and you set up for another trade based off of that movement. So the next trade is this. We can see that now that 84 is not necessarily the support or the area of that ledge when the market actually ends up dropping. We can move this down and see that this market ended up hitting at 3 different spots right around this area. Now it did fall and break through, but that medium price or that entry price that I would look at being able to get in now will probably end up being right around 83.30. And then after that, seeing how the market will kind of end up reacting off that. Now, two things can happen. Obviously, a lot of stuff can end up being true based off of this. This market could pop up to the upside as well. So the question is, if we look at being able to make a trade to the upside, what would that look like? The only way that we can be able to know what that's going to look like is that I'm going to go to Trading View. I'm going to take a look at West Texas Intermediate um, because that is the overall trading pair that is associated with U.S. oil. And we'll see how that kind of plays out. We'll talk about DAX next. End up taking a loss on DAX this morning as well. Great part it is I placed in 2 trades. Both trades, I placed in a buy, I placed in a sell. Both buys and sells end up getting kicked out. Placed in another sell, and yeah, placed in another sell. Ended up losing on that one as well. But I didn't move the trail stop. I didn't have a trail stop running off of that one. So put myself into a bad position. Typically, when it's overnight, I like to have a trail stop. So whether if I'm right or I'm wrong, if it does pop up in a position, I can be able to make a movement off of that. So this was the trade plan. It's exactly what it was actually shown. Entry was right around that 84 area. I ended up getting in again at 84 when the market actually ended up dropping. Since then, the market ended up tapping up. It created a counter trend line break right here, in which we was interested in. Since then, the market has moved out and made its move from there, which kind of goes back to what I ended up saying in the morning session yesterday. I said that if this market, if some of these markets started to be able to make a large movement and create another box over top of another box, or a consolidation area over top of another consolidation area, then what it just did was just basically build out a bigger consolidation block. And that bigger consolidation block looks like this now. It goes from being a small one to a very large one overall. Now, we end up having our drops and movement and everything else like that, but essentially, this is our larger consolidation at this particular point that we have to be able to pay attention to, and we have to be able to take seriously when it comes down to that position. So ultimately, what does this mean? This means that now I am not interested in being able to take a trade until the market breaks below 83 or breaks above 88. And then after that, being able to make this movement. Yes, we can be able to trade inside of this overall area, but we know that that's a previous consolidation that ended up happening. So there's really no reason to be able to jump inside of that trade, because now if we zoom out and really start paying attention to what's been happening for this overall movement, this market has been literally in consolidation for about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days at this particular point. So now at this point, to me, oil is untradeable at this point. Oil is in a larger consolidation zone. There's a larger high volume node that is being very much prevalent, not being shown on the actuals on the volume profile. But I can truly see that there's a larger consolidation box that is there that we have to be able to be aware of when we end up trading. So now the market ends up breaking up to the upside. What's going on, Peter? Hope everything's going well with you. How's your trading week been going for you? So end up looking at this movement to the upside, and this market breaks above 88. I would look at being able to get out at 92. Market breaks now below 84. That $76 $76 pivot that we end up looking at on Smart Trader will probably end up being the same pivot that they end up going after. I end up saying 77.11. I still think 77.11 will probably end up being a better position to get out. So I'm going to place it back at 77.11. But now it is, we got to be more patient on this movement and allow it to be able to kind of fall within these zones And then once it breaks out, now we have a better opportunity of being able to make a move off of it. So um, I like the sell to the downside. I think it has a better risk reward factor. Uh, we have a sell to the place to sell to the upside at 89 going out to 92. That would give us a 1 to 2.9 or 1 2.79. And we got a sell that's going to the downside that'll give us a 1 to risk reward factor of 1 to 4. So I'm going to place those in once I start seeing how this market's going to end up reacting. But that will be the idea when it comes down to oil. So I'm done with oil at this particular point in time. I would not recommend it to anybody because obviously it's in consolidation, but we won't trade it from 83 all the way up to 89. And then after that, we'll see how it kind of plays out. Okay, typing wide, yes, if that makes sense for the people that are watching that. United States dollar index, obviously it's going to end up being impacted by what happens today. We can see that currently right now the market is inside of this consolidation, touching the resistance of 13,829. Remember I said I wouldn't take a buy trade until the market broke out at 13,829. Currently right now the market has tapped above it and then currently it's at the resistance. So help me on NASDAQ and USJPY. Absolutely. We'll see how everything kind of plays out with this overall position. But we are at resistance. I do expect that this market may end up falling down to the midway point before 2 o'clock and kind of going from there. Morning trading at this point, I probably wouldn't necessarily be interested in unless you're trying to scalp, because obviously we want to see how the market kind of reacts. It's going to be a quick movement. There's going to be some type of movement that's going to happen at 9 that's going to fake people out. That's going to have people very excited about a movement in one direction or the other. If you do jump inside of that movement and take that trade, be aware that that movement may quickly slow down right around 11 to 12. And then from that 12 to about 2 position, the market's just going to be inside of a tight consolidation in whatever direction it is before being able to trade it. So currently right now, the United States dollar index, I'm not doing anything until after 2:15 before being able to make a move. So I'm done with that one. Gold. Let's take a look at that real quick and we'll kind of jump out of that. Gold is inside of another consolidation. We talked about a trade plan with the market. If it ends up breaking below 1658, I'll be interested in being able to take a trade. We placed in a pending order earlier yesterday where gold broke below 1658. The take profit would be at 1615 with a stop loss of 1681, which would be the top of the resistance. Currently, right now, that trade has not been triggered in. I'm totally fine with that trade not being triggered in yet. I would rather it be able to keep on moving until it's actually truly ready to be able to get in. So once that trade triggers in, then I'll look at being able to sell. If it breaks up to the upside, I'm not going to trade it again. Because if it breaks up to the upside, then it's going to go back to that long-term consolidation. So I'm not placing in a buy trade. I don't want to look at a buy trade on this one. I hope the market falls off and sells. So gold, not doing anything with as well. Now, to answer that question for you, Peter, if we're taking a look at what's happening with the chart with gold, remember gold has a correlation with the United States, has a correlation with the Japanese yen. Now, obviously, the United States dollar has a correlation with the United States dollar pairs. We can see that the United States dollar is in consolidation. At the top of the resistance of consolidation, we see that gold is actually pushing up. So that means to me, if I'm taking a look at US yen, if the United States dollar is going to the upside and it has a chance of being able to start looking at pushing to the downside because of resistance, and we can see that gold is actually pushing up, and that means that more than likely the market is probably falling on US yen. So with that information, I'm going to start off with US yen first before going into NASDAQ because I'm almost for certain that's probably happening. Let's see. Okay, let's see. Goes to weekly. Yeah, I can start to see it now. Okay, I remember. Okay. First off, my quick answer to this one is I'm not trading it. At least not yet. The reason being is because there's no fractal high to be able to work off with. Market has hit a D extension at 142. Since then, the market has pushed all the way up to 144 at this particular point. From there, obviously we know that the market is bullish, but we're looking for a U-turn to be able to have a retracement to be able to get in. From a daily perspective, the market is back inside of the buy zone, which means that, yeah, the D extension ended up getting hit, but the market has not been able to break below 141 to start having this market actually start to make a retracement. Now, it broke below the counter trend line, started to retest to the upside. There's a minor consolidation that is right here to right here that has to be broken in some type of direction first before truly making a move. Um, but remember, when an inner trend line breaks the outer trend line, then after that, you end up having movement to the downside or to the upside. In this case, it'll be to the downside. We take a look at it from a 2-hour perspective. We can see that this is the area that has to be broken before truly being able to make a decision on a move. So going back to what I said before, I would not do anything on US yen yet. However, I would say that there's a better chance. I'm not even gonna speculate on a better chance because I don't know what's gonna happen at 2 o'clock. So US yen, I wouldn't do anything with right now. Just put it like that. And then after that, at 2:15, we'll have a better idea about what's gonna happen. Because even though we've seen that the index pairs have been dropping when Jerome Powell has been talking, the United States dollar index as a whole has been pushing up. So that gives me one of those things to be able to say, okay, well, since we don't know, let's wait. Let's see how everything's going to play out first before kind of doing something with. So US yen, I wouldn't do anything with. Let's go with pound United States dollar because it's probably going to be the same thing. Just be to the downside. From a weekly perspective, market went into consolidation, was in consolidation for a very long time, was at a D extension that was expected to be hit at 1.185. When the market ended up breaking that counter trend line break about 10 days ago, there was an opportunity to be able to get in. If you did not get in, then quite frankly, you end up missing the biggest opportunity on that movement. Currently, right now, that would have been 860 pips for that movement, which was about, I'm sorry, this was weeks ago. That's 1, 2, 3, 4, 5, 6, 7 weeks ago. So at this particular point, there is a D extension that's still expected to be hit at 1.185. We are in an R3 zone, so that means that I'll only look at being able to sell down to that position. Daily has broken the counter trend line break. We're at 38%, so it still has a little bit of movement, but we can see that buyers are starting to be able to push this thing back up, at least at this particular point. What I would try to do, because if I'm trying to trade this, I would like to be able to get value. We can see that market end up breaking below the counter trend line break. It retested currently at this particular point, but it's basically at a buy zone right now. If this market holds this overall area, and then after that breaks to the downside one more time, then I'll be okay with being able to make a movement with the stop loss basically at the halfway point. Until then, there's really no movement. There's really no trade to be able to take right now on that point. Because I wouldn't jump into a sell 2 hours in the buy zone. But it is below the overall area for us being able to break to the downside, and there's still about 200 points of overall movement that is left. But I would like to be able to get a high price before being able to do anything on pound United States dollar. So I'm going to wait on that one. Once again, a lot of these moves, because of what's going to happen a little bit later on today, I'm not going to be very much interested in being able to jump in. I was interested in jumping into DAX because DAX has nothing to do with the United States dollar. It moves on its own, and it had a plan of being able to move to the downside, but just got kicked out of that movement. Same thing with oil. When I ended up taking that trade, it didn't have anything to do with anything, so we ended up going from there. Let's talk about the trade that we end up having on DAX, and then after that we'll go into Nasdaq, and after that we'll go to US 30, and then we'll close it out today. for its overall movements. So this was the game plan. I ended up taking a trade when the market ended up breaking below 15,595. Ended up happening like that yesterday. Market ended up pushing down to 15,533. And I was like, okay, well, gives us another opportunity to be able to catch it again. Then I look at being able to do two separate things. I will look at being able to buy the support, and then after that, run a trail stop all the way up to the midway point at 715. The market quickly got out and fell to the downside. I had a sell trade right at the I had a sell trade at the support as well. So I was trying to hedge to be able to see what the actual movement was going to end up being. So if it was going to pop up to the upside, I was going to try to take money and then try to ride it up to the upside. If it was going to fall to the downside, I was going to try to see if I can get this whole movement to the downside. Quickly U-turn, fell down. Market at this position last night when I was not looking at it, it went up about 93 points, and from there, popped right back up to the upside. And that's the reason why I said that this was a winning trade, and I gave it away because I didn't place in my trail stop. Even if I would have placed in a 35-point trail stop, I still probably would have ended up making something out of it instead of losing a percentage of the account. So sometimes you just got to be aware of that. I'm not mad. Obviously, anytime that you take a trade, you end up having a risk. So just want to make sure that you end up making good on that risk. But now what happens is this, just like what we talked about before. Um, since we know that there has been two different locations where the market has dropped, and we've proven that to be the natural support. Now the consolidation box goes out a little bit longer. The market ends up popping up to the upside. When we do have still the two resistance points, but at this particular point, it makes this last trade or these last few trades that we've been looking at irrelevant now. So we're not look at being able to trade this point to this point anymore. If we try to look at being able to sell this point down to that 12,450 area, the risk reward factor won't be there either, unless we're just truly trying to scalp. So I'm probably going to end up waiting for the market to be able to break out of this large scale consolidation um, before doing anything now at this particular point. Um, we can see that the B at this at 12,440 is really um, probably the better move if we're looking at saying that this market's going to fall to the downside. I don't believe that the market's going to pop up to the upside. That's just me, but that's just me. But currently, right now, um, I don't know. Sorry for coughing on the mic. That's kind of stupid, but um, let's see. Da, 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 da. Okay. So we're getting back to point. So back in 2017, where the market had like a major consolidation, we're just trying to see if we can be able to fight out that area. Um, so yeah, so for right now, and I can start to see this whole thing kind of build out as well. Um, so over the summer, essentially, the market has been gravitating from 13,689 to where we are now, at 12,550. Uh, I'm not going to say that now this whole area is untradeable, um, like I ended up saying with oil, but I will pay attention to what's actually happening for us this overall movement. We still have our spaces inside of here, but now we truly know what's happening with this direction. So nothing to do on DAX anymore. Um, yeah, nothing to do on DAX anymore at this particular point. I'm not going to look at jumping in right now until the market actually ends up breaking. And then from there, even there, I don't know how I'm going to end up reacting off of these consolidation points at this particular point. All right, so let's go over NASDAQ. So game plan is still intact. I still got a trade at 11,690. Take profit. It's expected to be down at 11,370 with a stop loss um, above 11,860. Um, force that movement. I want to make sure that that's still in. Let's see. Uh, make sure I still have that trade in. Okay, I got it. 11,690 stop loss 11,847 take profit 11,370. For that overall movement. We'll see how this market kind of reacts. Just like what I ended up saying with DAX, we're starting to build out a larger consolidation that started on the 13th, and currently where we are right now, we're kind of in the middle of that overall movement. So we're talking about 8 days of kind of built out consolidation at this particular point. This means to me that when this news comes out, there's going to be a pop in some direction. And I think that pop is going to end up being about 300 to 400 points. Uh, if it pops up to the upside, I think it has a good chance of being able to get up to 12,156 to the upside. If it falls down, then obviously we have this overall area that we could be able to look at being able to trade. So I'm not going to say excited, but I am kind of I'm kind of interested to be able to see how this market's going to end up moving. That also is also going to end up being kind of interesting to see how the market's going to end up reacting at 9 o'clock. I did have I had a buy stop at 11,902, where we end up having this little breakout moment. But I'm probably going to run a trail stop on that one. I had a sell stop at 11,902 to 11,370 as well. I'm probably going to close out on that trade. The reason why I'm probably going to close out on that trade is because if the market ends up pushing up right here and then rejecting, this is not necessarily the true resistance anymore. It's been broken out of here a couple times. So it may end up being something like that, compared to what I ended up having before. So I had I'm going to cancel out on my buy stop. I'm sorry. I'm going to cancel out on my sell limit right there, 11,902. If it rejects off manually, I will manually place in that trade. I'm not gonna force myself to take that trade to the downside right now. I don't want the same thing to end up happening to DAX this morning that happened to me with Nas. There's no reason to be able to do that twice. So currently right now, 11,902 to 11,855 will be the trade that I will look at being able to take up to the upside. But it has to be able to break out of this overall area to the downside. 11,705 down to, did I say that right? No, 11,690 to 11,370 will be the sale that I will look at getting in at. Last one, let's go into US 30 and we'll close out today. US 30 is building out, once again, that same type of block of consolidation where legitimately what's happening is that we're going to end up getting this. And this is going to mean a lot going into October, because remember, October is push month, meaning that typically there's a bigger consolidation that's going to end up being built in October. And once that consolidation is broken, that's when the true run is going to end up happening. So with US 30, I might have to start adjusting some of my trades as well. I have a buy stop at 31,310, which would be the outside of this overall movement right here. I have a sell stop at 35.15, where the market will end up dropping to the downside, and I have another buy stop at 31.430, which will end up being up here somewhere, looking at being able to buy. I'm gonna keep my eye on if the market does look at being able to break to the upside or to the downside, especially right before 8:30 and 9:30. If the market ends up pushing down to 30,580 or some position like that, and gives that opportunity of being able to buy as a scalp, I might end up looking at being able to scalp at least to the halfway point. Um, but that is going to end up being one of those calls of being able to say, hey, did you see the move? Did it truly reject? Can we get into it, and can we be able to place in a trail stop on this one? That would be the only reasons why I would take that trade. But ultimately, right now, we're getting to a point to where US 30, NAS 100, and DAX are going to end up being untradeable until they actually end up breaking outside of these zones. So we're getting closer. We're getting closer to the push months. And once again, once the market ends up breaking out of those two areas, now you have a true trade. Now, for the people that like being able to trade inside of consolidation, I'm just not one of those people. But because we're building out a larger consolidation block between all of this would give me one of those situations to where I would personally like being able to trade inside of the consolidation, meaning that if this remains to be true, and this is the block that we're going to end up working off of, there's 700 points between this range when it comes down to movement. So if it goes to 30,005 or 580, I will look at being able to buy with the intentions of being able to keep it all the way until 31,308. And if it sells, I will look at it with the intentions of going from 31,308 all the way down to 31,570 for its that overall movement. From a long-term perspective, if you can be able to hold it that much. If you have enough equity, if you have enough patience to be able to hold it that much. Some people do not. So that's one of those things to be able to keep in mind, but there may end up being an opportunity there. Okay. If you like what I end up doing, because we are done today, please make sure that you end up clicking on that boost button. Community is growing very much. I do appreciate that. Discord group is being built out right now. If you're interested in being able to jump in, being able to know a little bit more about my Discord group, the membership and everything else like that goes along with that, please give me a private message and I'll give you more details and information about that. I do appreciate everybody being able to stop by. I know it's 6:30 in the morning, or 7 o'clock now. So most people don't necessarily trade this early in the morning because obviously you got an hour until, or hour and a half till the actual U.S. session actually starts. But for the people that end up hanging in with us, good luck to you in trading today. Remember, be patient, wait 15 minutes, see how the market kind of reacts. Don't jump into false breaks or don't jump into false moves early in the morning. Allow the market to be able to kind of play itself out. Then after that, pick your spots when it comes down to making trades. Have trail stops when the market actually ends up making this movement today. And from there, get what you can and then get out. Unless you end up getting into a very good position and allow it to be able to run. Like always, plan your trade, trade your plan. I'll see each and every one of y'all in the next video. Take it easy.